what is the right strategy that you might want to implement when you actually need your corpus, you actually need the money that you've accumulated for so many years. It has to be different for every investor because it's your financial portfolio and it is a customized way that you have planned your portfolio. So it is not one medicine for everyone or one strategy for everyone, but on the discussion today, we'll try and decode different strategies that senior citizens specifically might want to adopt from here on. I have with me to talk more on this Shweta Rajani, Head Mutual Fund Anand Rathi Wealth. So Shweta, good evening and welcome to the show. Lots to discuss on SWP, but then let's start with a very basic question, very important question in a very simple way. If you might just want to explain us what is a systematic withdrawal plan.
Sure. Good evening, Kavita. Like you said, systematic withdrawal plan is, in very simple terms, a plan which allows you to have a specific amount in your bank account at a specified interval. So, for example, let's say your monthly living expenses is 20,000, and you want on first of every month 20,000 should be credited from my investments or mutual funds into my bank account. By filling in a systematic withdrawal plan form, every month on first 20,000 will get credited to your account. It will be redeemed from the scheme, credited into your fund. So it gives you that regular income on a particular date that you would need for your various needs. And it's very efficient, effective, even from a tax standpoint.
All right. So even now, as a concept, Shweta, we know that SWP can be taken up or applied by any kind of investor. But my thrust on the show today is to explain senior citizen because for them, a lot of them actually they depend on their regular income after retirement on an investment portfolio. If people are getting it via rental income or the interest that they are earning from fixed deposit, that's a separate thing. But then when we talk about investments like having an equity-based or equity-oriented financial portfolio, how can SWP help them? There is a particular time and a stage when you need to start planning this, and when we talk about retirement, this has to be the first goal because you need to invest for a very long time to reach the corpus that you might want to achieve. We also have to know that after retirement, normally we see people don't have any other income, though that trend is changing now. People are also looking at other various aspects of making money or having a regular income. But then for someone who's dependent on a financial portfolio, it's important for them to know when to activate SWP, and before that reach a certain corpus from which they might want to activate this particular feature. So talking about senior citizen, how helpful will SWP be?
Absolutely, Kavita. See, your retirement planning should start as early as possible because, targeted is a retirement age would be somewhere around 55 to 60 years. So, 20, 25 years before that, if you start planning, that's the best thing. Now, when should you, actually trigger for an SWP? Uh, and what should actually be your asset mix? That becomes very important. You may be having a completely equity portfolio, let's say, till you reach that age of retirement. But I would say just 2 years before you are going to be entering into your retirement phase is the time for you to relook at your asset allocation. If you're 100% equity post retirement, that cannot continue. Post retirement, you may want to have somewhere around, let's say, an ideal 60-40 equity debt allocation, say plus minus 5-10%, depending on how an individual's risk appetite is. Second important point, how much should be your systematic withdrawal? I'll just give certain examples with numbers. Let's assume that you have a portfolio value of 1 crore. Ideally, your withdrawal rate should not go beyond 4-5% of that. Because let's say your portfolio is growing at around 10%, you're withdrawing 5% of that, it'll help the money stay for a longer time period. So coming back, if you have a 1 crore corpus, then ideally your withdrawal for a particular year should not go beyond 4.5 lakhs, which means you can have a monthly withdrawal of, let's say, 30 to 35,000 every month. In this way, as your expenses go on increasing because of an inflation impact, you will still be able to sustain and post inflation manage your living expenses easily for the next 40-50 years of your life.
If you like this video, then like, share and subscribe to ET Now.